It's Thursday, June 3rd. This is The Street Live. I'm Katherine Ross, and I'm joined by Real Money contributor Stephen Guilfolye, aka Sarge. Jim Cramer, as a reminder, is off this week. So, Sarge, we do have a bit of a weakness in this market. We're seeing all three major indices down right now. What are you watching in the markets?
You know, I'm watching the same thing everybody else is. It's kind of a quiet week away from the meme stocks. So I guess where the action is where the traders have to go. So, I watch the macro always. I base my portfolio, my core portfolio, on what I see in the macroeconomic, in the economy. But as far as my more active trades, they're what's being popular right now.
Well, you did mention in your Real Money column this morning that you were day trading AMC yesterday. Now, why were you day trading this stock?
Well, funny thing is, early in the morning, I got the feeling it was going to go higher. So while I was writing, because I provide some content for Real Money, while I was writing my piece on Zoom, I just grabbed a bunch of AMC and I kind of forgot about it for about an hour and a half. I was working. I threw an offer out there at $55. I bought it down a little above 40, and I got a notification while I was working that I sold my shares at 55. By the time I looked at it, they were trading at 59. But I was like, holy cow, I got some found money here. I might as well try to day trade it and make it larger. I made it smaller, but I did day trade it the rest of the day.
I mean, it's interesting because I think that any apes watching this will disagree with you selling at this point, Sarge. But I do think that an ape is a Reddit trader, by the way, just in case no one knows what that is. So what is interesting to me, Sarge, is that you dig into the stock. You day traded it yesterday. I'm wondering if you have any appetite when it's down like this, if you think that it could push higher because there's so much momentum around these meme stocks this week, and also just in general, what you think about this short squeeze.
Well, it is a short squeeze, and it's being provoked probably as much by algorithms as it is by the apes or whatever you call the social media traders. It's probably a combination of the two. They feed off each other. Momentum is created. If you get stuck holding the bag, you get hurt very badly. Then again, I suspect that a lot of these hedge funds are probably day trading the names themselves, because when I have a really lousy position that I don't want to get out of, I tend to trade around my core position in order to lessen the damage to my P&L. So if these folks at these hedge funds that are caught short are doing that, the damage isn't as bad as it's been reported in the papers, because these guys, if they have any talent at all, are reducing the damage to that P&L. By the way, I just bought some AMC while we were speaking, so I'm long again.
Oh, so you're trading right as we're live. I like this. So
yeah, in fact, I swapped out of Workhorse back into AMC as they both were dipping just now.
Okay, that opens up the conversation that I wanted to have about Workhorse. So you were into it. You've now sold it, as you just said. I mean, this stock doesn't really have a lot of momentum besides for this meme stock pressure that it's gotten. I mean, it didn't even really pop when the EV stocks were going off. So why were you interested in this stock this morning?
Because it was popping this morning in the pre-opening hours. I don't think it's a good company. I don't think they're going to make money. I merely use it as a trading vehicle. I bought it earlier this morning, and as soon as it started to give up some of those gains, well, I made my way out of it. I actually sold as we were ticking down 987 before we went live. And then I swapped into AMC as we went live.
Well, and Sarge, I don't normally get to talk to day traders, especially those who are trading right now. So I want to open up this conversation a little bit in asking you for your advice for any younger investor, if they are a meme stock investor or just, somebody who's interested because of Reddit, if they're looking to day trade at all, what is the number one piece of advice that you have for them?
It's a little difficult to explain, but you have to have something you go off of. You have to have a technical indicator or something that's time tested, because the first time you try to become a day trader, I'm not a day trader. Okay, I'm everything from an investor to a long-term trader to a short-term trader to a day trader. I'm whatever is called for at the time. But if you don't have something that sends you a buy signal or a sell signal that over time will prove correct, at least more often than it fails, then you're really going to be lost in space. And if you're someone who's never been in this industry and never traded stocks before, and you buy a name like AMC or GameStop or one of these because you see it moving and you see it becoming popular, well, you're probably going to think you're very, very good at this in the beginning if it goes your way, and that will probably get you into more danger. So, I use exponential moving averages and simple moving averages. But instead of using the 21-day EMA, I use the 21-minute EMA. I use the 9-minute EMA and the 12-minute EMA. So basically, I try to use the intraday MACD as an indicator. Okay, and for folks who don't know what that is, that's that little chart at the bottom of most of your charts. And when the black line goes above the red line, to simplify things incredibly, that's usually positive for a few minutes. And when the red line goes over the black line, goes below the black line, it's the opposite.
Thank you for explaining that. So,
if we had a half hour, I could explain it in depth.
Well, of course. But the way that you really simplified it, I do appreciate. And I want to quote your market recon from this morning, which people can read over on realmoney.com. But you say energy easily led the day, which is a cyclical type group, but clearly investors took on a defensive posture for the day. This is in reference to yesterday's trading session. 3 of the top 5 sectors came from among the 4 defensive sectors, while 3 of the bottom 4 sectors came from the 5 cyclical sectors, including the materials and consumer discretionary groups. So I'm wondering, Sarge, why are we seeing defensive sectors move to the forefront of investors' interests, at least in yesterday's trading session?
Well, it's been a trend of late as well, and I think traders have to understand that the markets, the headline indices, the large cap indices, have all moved sideways from anywhere from 2 to 4 months now. Really staying within maybe 2 to 4% of all-time highs without taking a severe beating or breaking through those highs. So you have to be prepared to be playing defense moving forward. I think you're probably better off in companies that either produce, manufacture, or mine something for a profit or transport something for a profit than you are right now in the formerly growth type names. Now, I'm not out of those names completely. I'm just less exposed to those names, and I'm more exposed to the Alcoas, to the Freeports, to precious metals in general. I am exposed to British Petroleum and Exxon. Again, I like how Exxon, now that they have some activist investors getting involved there, that may actually be a name I want to hold on to. I've gotten into it as a trade. So I like companies right now that, from my investment side, that actually I know they make a profit. I know they have the cash flow, and if as a bonus, if they pay a nice dividend, that would be great. I think we have to be wary that what's transitory about this coming inflation, we're already in this inflation, and it might get to somewhat alarming levels. We have to be wary that the transitory part of that might be the demand side fueled by the stimulus. So your consumers are going to have a little bit of sticker shock when they go back to the stores, as I had, and they might not have the money in their pockets that they had, that Joe Biden and before him, President Trump, had given them, even without working for it in some cases. And a lot of their obligations were put off, at least for some time. So they had money in the bank, money in their pocket. On the inflation side, what we have to worry about is structural inflation. What becomes structural? If there is pricing power created in certain pockets of the economy, I'm getting a little wonky here, I know that for average people, but if some of this transitory inflation becomes structural, then we're not going all the way back to 2019 on inflation. Okay, we're gonna level off somewhere higher than that. And a year from now, they're going to say, oh, look, inflation calmed down. And that's because we'll be looking at, as we are this year, looking at ridiculous comps going back a year. So will we be next year?
Well, since you brought up inflation, I want to ask you about the Fed, which is going to begin to wind down the program, which purchased billions of dollars in corporate assets, helping, of course, to shore up the economy during the pandemic. I mean, with these lingering fears that both investors and, quite frankly, American consumers, as you rightfully mentioned, Sarge, have, is now really the time to wind down this program? And what do you, as an investor, want to see from the Fed going forward?
I think it's certainly time to pull back on the asset purchase program. It's the right thing to do to get out of this 13.75 billion or whatever it is in corporate debt and corporate debt ETFs. That's the right thing to do in that program. They don't need your help anymore. But who else doesn't need their help? The housing market doesn't need their help anymore. So you could pull back on that $40 billion worth of mortgage-backed securities all the way back to zero, cutting your asset expansion, your balance sheet expansion program by a third without really damaging the real economy. And because the housing market, certainly there's more demand than supply. It certainly doesn't need their help anymore. All they've really done, Katie, is price people your age out of not only real estate, but out of family formation. So they're damaging the next generation or two.
Yeah, that's actually something that I spoke about the Federal Reserve on my episode of Coffee with Catherine, which will be releasing later today with this guy Ross Mack, who's the host of Maconomics, and we talked a little bit about the Federal Reserve and how, based on Stan Druckenmiller's comments, that the Federal Reserve at this point is really making the billionaires and millionaires of the country a little bit richer with this printing, but it's not doing a service to the average consumer, to the millennials of my age who are trying to think that like maybe now is the time to buy a house, but just cannot afford to put that cash up front like some other offers can.
No, definitely. I have two children about your age, and no, they both feel that they will be lucky to ever have a family the way I did and my father did, and they feel that they probably. I mean, I know it's already been the case for 25 years in this economy, but like my wife stayed home when they were young, and I don't see that happening for either one of them.
Yeah. I want to move into Tesla because those of our viewers who have been following us for many years now would know that this is a favorite topic between the two of us. And I want to base this on the Tesla being in a little bit of hot water with the SEC as the SEC sent the company letters focused on Elon Musk's tweets. Of course, we know that this has been a back and forth between the SEC and Tesla itself. What's interesting here is the discourse, right? So many people are saying, what really can the SEC do? Are they going to actually take action instead of just sending letters, Sarge? And I'm curious to get your take on this story.
Well, I think Tesla's in a little bit of trouble, to be honest with you. Not so much from the SEC. They've been in and out of trouble from a regulatory front for a long time because their CEO, while being a genius, is also quite eccentric. Technically, 602, I think it is. Let me look on my quick chart for you. I think 602 is a huge number. It's a 200-day simple moving average. It's the last major moving average, and they broke through it today. It's trading around 596. If that line can't be regained shortly, I think Tesla could fall a long way. I think they're running into more competition than maybe Tesla shareholders ever envisioned. General Motors has a strong electric vehicle program. Ford Motor has a strong program. Toyota is coming up with a strong program. Even Subaru, whose CEO had said he would wait and let everyone else spend their money on producing these vehicles before he jumped in. Even Subaru is now jumping in. So now Tesla not only has to compete with the rest of the EV space where they were clearly best in class, now they have to compete with mass producing automobile makers who have been here a long time, who are clearly better than Tesla at pumping out vehicles.
So is this a stock that you're going to avoid for the time being? Is there anything that you want to see from them that would make you feel maybe a little bit more bullish on this company?
I think if they can retake 602, that spot right there, if they can retake the 200-day line, that's a spot where I know for a fact from my experience that a lot of portfolio managers would jump on board if they saw that line taken and held on a retest. So I would probably jump in with them just to catch the trend.
Sarge, as always, it's such a pleasure to talk to you because I get such a different take. You come at it from not only a fundamental standpoint, but you also you're so blunt, and I appreciate that. So thank you so much for joining us today.
Well, I like you
really
too.
do. There we go. Thank you so much for joining us today. And viewers, of course, thank you for tuning in. I am now heading over to actionalertsplus.com to join Jeff Marks, and we'll be hosting our exclusive daily rundown over there. Come join us. I'm Katherine Ross, and we'll see you tomorrow.